Hi everyone, it's John Mitchell. In this video, we're going to look at business objectives, which are the goals that the business is aiming to achieve. Now, those objectives can be really long-term objectives, medium-term, or even short-term, that sort of day-to-day objective, which helps the employees know exactly what they're trying to achieve on a particular day. So objectives give the business and the employees that work within the business real direction so that they know what it is they're trying to achieve and they know their role within the business in terms of achieving that particular objective. Now, there are some really specific goals or objectives that we need to get to that are written into your study design. But first of all, I just want to spend a second talking about the sort of long-term objectives that many businesses have. Not all businesses will have these, but many of them will, which is a vision statement or a mission statement. So the vision statement is what the business wants to become in the future. So that real long-term objective of what it is that they want to become. Whereas a mission statement, still a really long-term objective, is what the business stands for, its purpose. So what's the real purpose? What are they trying to achieve? And how it intends to actually achieve that particular objective. As I said, not all businesses will have those, but many, especially sort of larger businesses, will have these types of objectives, which then helps provide real direction for the business in terms of what they're trying to achieve. And all the decisions that they make, whether they be long-term, decisions that affect the long-term direction of the business or the short-term direction of the business, they should all be in line with the vision statement or mission statement that they have so that they're actually working towards the achievement of their long-term objective. Now, some of the more common specific objectives that are written into your study design are, first of all, to make a profit. So profit is the amount of money remaining after expenses have been deducted from revenue, revenue being the money brought into the business through the sale of goods and services, and then expenses, all money flowing out of the business to pay the bills and rent and all those types of things. What's left over after the expenses have been paid is profit. And so there's two parts to that equation, the revenue and the expenses. So businesses can look to increase their revenue in order to increase profits, or they might look to minimize their expenses. Or possibly even do both if they can, which will look at increasing their profit. The next one is to increase market share. So market share is the proportion of sales in a market controlled or owned by a particular business or product. So I think probably the easiest way to look at it is in terms of a pie chart, where there's obviously in a pie chart there's 100%. Now here, this data was taken in March 2016, but the Australian supermarkets, was their recent data. So Woolworths controlled 37% of the market, which meant that all the people that were going towards to purchase items from supermarkets, 37% of them went to Woolworths. And then Coles had 33%, so 33% of all the sales within supermarkets went to Coles, and 12% to Aldi, etc., etc. And so to increase market share, which is one of the main objectives of businesses, the business is taking market share away from another business. So if we go back to this pie chart, we're looking here again, Woolworths, if it's 37%, let's say they were to increase their market share to 38 or 40%, that would mean that they are taking market share away from some of their other competitors. And it could be a combination of all of them. So that's one of the main objectives of a business. The next one is to fulfill a market or a social need. So a market is a specific group or industry that a business focuses selling its goods or services. So a common group of people that have similar traits, that forms a market where they are looking to buy similar products or have similar needs. Now, a need is the group's desires for a particular product of specific benefit. So what are they actually looking for? And all a business really looks to do is to satisfy that particular need. If there are enough people in that market and the business is able to satisfy that need, then it's a way to become profitable or successful, or have a successful business. Now, how do they figure out what that particular need is or what the needs of the business are? Well, they can conduct market research to help them find what the different needs are of different consumer groups, and then just work on ways to satisfy those particular needs. So if we look at the, sort of a more recent trend of markets, the mobile phone market, which is obviously a really large market, but once upon a time, mobile phones were used for just text messages and phone calls. But really recently, due to technology, due to companies such as Netflix, Stan, and all the other streaming applications that are available, the telecommunication companies like Telstra, Optus, Vodafone, and all the others, they've had to change in order to satisfy that particular market need. Once upon a time, when they made their plans, the plans were based around how many minutes or how much money of phone calls, so the total cost of phone calls that you could make, and also text messages. Now, many of those telecommunication companies will say we have unlimited calls or unlimited texts on many of the plans, and what they're focusing on is the amount of data that you can download, because the needs of the market have changed. And so what they're trying to do is satisfy the need of that particular market, which, as I said, is a really large market. Then we have social needs, which are more focused on the community and how the business can look to improve the lives of others. So there may be, within the community, there may be a specific social need that needs addressing, and a business may be able to address that or fulfill that particular social need. Next is to look at the meeting the need of shareholder expectations. Shareholders are those that own the business, and they expect to make a return on their investment through what we call capital gains and dividends. Capital gains meaning the value of the business is increasing, so that intrinsic value, what the company is actually worth, has increased, and dividends is the company's profits, and a shareholder gets to share in those company profits through what we call dividends. They are owed part of those profits in terms of the percentage of the business that they own. Now, businesses have many other objectives, such as improving productivity, minimizing the impact of the environment, and many other examples that you may go through in class. The type of business will depend on the objectives they have. So, for example, earlier we looked at a social enterprise. They'll have objectives other than meeting shareholder expectations, fulfilling that real social need. That's where their real strong objectives are. Whereas companies, especially public companies, will trying to increase shareholder value. So they can change depending on the type of business that they have. Businesses implement a series of strategies to help them achieve their objectives, and we'll get into those strategies later on through future videos. And it's important that the objectives are monitored and corrective action taken where necessary, so that we don't just set an objective and then forget about it. A business needs to set the objective, implement strategies to achieve that particular objective, and then monitor and measure and evaluate to see whether that objective is being achieved. If it isn't, then they can take corrective action and implement different strategies or make tweaks to the current strategies that they have. So that's what we're talking about when we talk about business objectives. So just to summarize, business objectives are the goals a business aims to achieve. Specific business objectives include making a profit, increase market share, fulfill a market or a social need, and to meet the expectations of shareholders. They're the ones listed in our study design. Obviously, there are many more than those, which you're more than welcome to use, but it's important that you definitely know those four. So for questions, activities, and to find out more about our SAC and exam preparation lectures, then come on over to teachingbubble.com.